Hi guys, welcome to my channel. I am Friday Straits. Today I'm going to be giving you analysis on what we'll actually be seeing on Gbpusd. Remember, I actually trade only Gbpusd. So let's go to the charts. I remember I always tell you sometimes that you the market doesn't actually, the time frame doesn't actually count. Mostly it's what you actually know in the market that counts. So when I was saying it, I was saying it with precision, and I meant it very well. Look at the financial situation now. Before I go into the charts, I actually want to tell you that I'm actually accepting mentorship for my program. I accept mentorship for my program, just little money, and you'll be in my mentorship, where I analyze the market every day. I tell you what happens in the market every day. You can actually follow my YouTube channel, subscribe to my YouTube for more market updates. I come up with these updates on almost most of the time. Sorry, I stayed away from the market because I had fever and all that. So let's go into the charts. Don't forget to subscribe to my YouTube channel. Subscribe to my YouTube channel, follow my page. In case you are interested in my mentorship, I actually offer a mentorship program where I give you a hand on one-on-one. I educate you on what happens in the charts. I tell you what is all that, the chart and all that. Where you get acquainted to the chart, you see it and see it and see it for yourself. So guys, follow me as I bring you in-depth analysis of what the market is actually saying. Now let's go to the chart. We are on daily. We start this chart on daily. Start it on daily. From daily we go down. I will even go down up to 1 minute on this chart. So follow me as I go in detail. Now the market is actually in a stage where you before you go into the chart, you actually know what you are looking at, and then you work on it tirelessly. Look at this. Is what there is what we call daily range. I will mark out the daily range for you. I'll mark it out. I'll mark from here to here. This is the range we're actually dealing with. Let me mark. We're actually dealing with. This is the range we're actually dealing with. Any other thing outside here is you should be looking at this market from this perspective. Now this is the range we're actually dealing with. Forget about other ranges for now. Let's deal with this on a daily time frame. Now if you divide this thing into two, take your Fibonacci tool and divide this range into two. Let's see if we can get it. Give it a 50%, divide it into two. Let's see what happens. If you divide it into 50 into 2, what will it give you? Look at the range. It will give you this. Look at it. Look at the 50% of this range. When you get this 50%, because there is this there is a way that the market is booked on. The market is don't just booked. It's booked based on algorithms, based on algorithmic signatures. Now look at the 50% of this range. Let's take it this way. Then we'll remove our Fibonacci. Now, as we play 50%, let's also play it based on the ranges in the market. Now, if you take this and draw your 75%, look at it here. Look at why I am telling you that the market runs on certain algorithmic signatures. Look at it. This is 75. This is 100%. This is 75. This is 50%, right? Now, if you take this range from here to here and divide it into two, let's do it again. Let's take the Fibonacci tool again and do it. Let's take the Fibonacci tool again and do it. Let's take this upper quadrant and divide it into two. When you divide it into two, you have something like this. Where is your 50%? Just take it yourself and you understand what I'm saying. If you divide this into two, you have 1, 2. Okay, it's the triangle that actually changed. Let's use the Fibonacci tool. Let's get to the Fibonacci tool. Let's use the Fibonacci tool and divide. Just have to be precise in what you are doing. Now, if you divide this into two with the Fibonacci tool, this is what you get. This is what you get as 50% retracement. So we'll drop this in the 50% range. You understand? Just follow me diligently as I show you everything that's happening in the market. Don't forget to subscribe to my YouTube channel. follow me on all my socials. Like I was actually saying, this is the range, this is the daily range that we actually have to deal with. And I was explaining to you, I told you that the market is actually booked based on algorithmic signatories. Look at when the market returned to 75% range. Look at how the market is actually respecting this 75% range. You can actually see it for yourself. Look at this. This is where the market, this is what we call change of state of delivery in the market, in the algorithm. When the algorithm is actually projecting up, when the algorithm begin to show you signatories that it's actually changing in the state of delivery. Look at it. This is the range, this is the high, this is the internal high, this is the external high, and you can actually see how the market is actually respecting this. Look at what the market has actually done. Okay, let's have this. This is the range, this is the range. Remember that we are in the 75% range. This is the range, this is the dealing range that we're actually dealing on. But look at how the market came and broke this particular stage, this particular dealing range, to show you that the algorithm has actually started propelling. It has actually started showing you that it is booking the orders on the higher time frame. Where is it going to? You mark out your dealing range, and since the algorithm has been able to deal with the market from the downside, deal with it on a 75% range, then you should be targeting it also on a 75% range. And then wherever it is going, remember that whenever you have highs, whenever the market creates double top and double bottom, that is where the algorithm understands that the market, that there are liquidity in that place. I'll still come to that. Now, the moment the market broke this particular range, from here, this is a high, this is internal high, this is internal liquidity, this is external liquidity, this is a new high that has been broken. What will happen? You begin to sense that the market is actually going to say something. Now, you have this. Since you have this, and the market actually returned, where did the market return? The market returned to 75% retracement of this particular range from here to here. The market returned to what? 75% or 50%. That is to show you that the algorithm is more interested in the upper side. It is not coming down to create a new low. It is now creating a new higher high and creating a new higher low. Now, this is it. Now, whenever you have this, then you have a volume imbalance here. This volume imbalance, you have a fair value gap that the market fails to return to. It shows you that the algorithm is no longer interested in the downside. It is booking its order on the upper side. Where is it going to? Since it returned the whole of this range, it returns to 75% down. It is showing you that if you take up this range from here to here, it will return to 75% of it. Just take your Fibonacci and mark out. You understand what I'm saying? Now, this whole range, 1, 2, we are dealing with this whole range from this range from here. This is the dealing range from here to here. Now, the market went up, created a range, returned. Instead of coming down to 100%, it returned to 70%. That is to show you that the algorithm will play a 70% range. This is how the algorithm is booking. Now, when you take this, it returned to 70% of this. It returned to 70%. Meanwhile, look at double top. This is a liquidity. This is a liquidity. It created the double top here and smashed it away. Smashed away the top. What is it showing you? It is showing you that it has manipulated. And the algorithm is always interested in where there is liquidity, where the money is. And the algorithm has seen a top here. It has seen a top here. The people are putting their stop loss here, hoping that the market will go down to create a new low or even come to this particular range. You understand me? So now the algorithm understands it. Then it came up and smashed them away. Now that it has smashed them away, where did it smash them to? Look at it. Where did it smash them to? It smashed them to a particular range, to a particular fair value gap. Look at this. There is a small fair value gap here that the market smashed them to. Now, when you look at it from this side, But then on this 1 hour, this is the range